Well, good afternoon, everybody. Welcome to the October 17th edition of Bull Sessions. My name is Mark Robertson. I'm joined here by 3 or 4 very illustrious guests. Ken is actually out wandering around Michigan looking at beautiful displays of foliage and leaves turning gold and orange and all that kind of stuff. So he's unable to join us today, but we are joined by an extremely wonderful set of contributors, starting with Houston's own Matt Spielman. Good afternoon, Matt.
Good afternoon, Mark. You talked about hopefully we warm up to these small stocks. I hope we all warm up because it's 68 right now, which is not what people have been used to after a very hot summer.
That's traumatic in Houston, huh?
Yeah.
That's
I had
tough.
to close the schools.
68, we'd be sunbathing, Matt, in Michigan.
Yep. I remember the days.
Okay, and then we also have in the back room a recent presenter of the Thrift Savings Plan, and he's been contributing mightily to the hunt for small companies to run through the gauntlet. Ty Hughes, welcome, Ty.
Thanks, Mark. Good afternoon.
How is the weather in the D.C. area, and are the leaves changing out there?
Slowly, yeah, they're still pretty green. They're just starting to turn here, and it's kind of in the mid 60s. That's where we are. So it's we're moving into the fall season rapidly.
Yeah, I was kind of hoping to get outdoors and play tennis one more time, but I'm not sure we're going to make it again this year. All right, also in the back room, and well, speaking of places where the leaves are probably not changing yet, welcome back Kim Butcher to the program. She's been away for a little while.
Yeah, amazing how losing my mom had a lot more kick in the gut than I expected, truly.
Well,
even though I knew it was her time and everything else, it's hard.
Yeah, there's nothing easy about that. I just went through an anniversary yesterday. Same thing. So you know that our hearts are, and we certainly, our hearts and thoughts are with you. Absolutely.
Thanks.
Welcome back.
Yeah. The ironic thing is I didn't know it was an anniversary for you, and one of my best friends lost his mom yesterday. So God is taking him on a special day.
Yeah. So anybody listening out there, please don't go away anytime soon. We like having you around. And last but not least in the back room is Kevin Galogli. I don't know if he's going to be actually able to join us at all this afternoon, but he is stalking and potentially heckling.
I'm doing both, and I can multitask on that while I'm putting together my stock presentation.
Okay.
It's a beautiful 60 degrees here in Baltimore. And I don't know, did Ken know that there was more than just a couple hours where the leaves change in mid-Michigan, or is it the fall so short there that you guys only have it for a couple hours before you go straight to winter?
The long and short of the story is it's happening rapidly, and for whatever reason, chemically or environmentally or whatever, it's happening sooner and faster than is normally expected. So that is why they did their emergency run to go and see the splendor of Michigan these days. So good stuff. All right. So welcome to all of you. Please feel free to chime in as you see fit. As you can see, things are getting ugly around here. We are kicking off a cage match here this afternoon, and also delving into the best small companies. And I am very enthusiastic and hopeful. With some of the names I see rolling across that list, we'll actually introduce the process and invite anybody to share the ideas that they have, but that's where we're headed here today. All right. Here is our weekly reminder that Portillo's is not a sponsor of this program, but they should be. Cue Kevin in 3, 2, 1. No heckling from Kevin on this one?
You really want me to speak. I'm trying to be so good. I'm shutting up. I'm waiting for Sammy Scobles to show up here, the fine hot dog in my hometown, hot dog place.
How do you turn down a pumpkin pie shake and that stack of onion rings? I mean, come on.
Well, the onion rings without all that other junk on it would be pretty good. But
all right.
The onions would just give me enough indigestion. I feel like I'm having a heart attack, so I'll pass.
All right. You guys be good. All right. Here's our weekly reminder that this is an educational demonstration. No investment recommendation is intended. Everything we do here is to illustrate and demonstrate the philosophies, methods, and techniques of the modern investment club movement. So we'll be talking about the discovery and analysis of a few stocks. Please do your own homework before you make any decision. Don't take anything and run with it without doing your homework. If we own something, we'll try to remember to tell you that. The roundtable is a couple weeks away. We actually did move it into November 1st to stay away from Halloween night. And we will actually finalize our best small company selections in the half hour preceding that session. So that monthly roundtable program, we are tracking at about a 16% rate of return annualized since 2010 on the tracking portfolio. So these guys all bring some pretty good ideas over the years, and it's been a wonderful thing to watch. If you'd like to be added to a reminder, to get an email reminder about that actual event when it happens, send an email to nkavula1@comcast.net, and Natalie would be happy to remind you as that comes around. If you have any questions or suggestions going forward, our two email addresses are there at the bottom of the page. And yes, that's a cage match on the lower right, and I don't know who the wrestlers are. All right, here's a little bit of fun. It's basically that cage match known as dueling economists there on the right. Those are, by the way, within like 6 hours of each other. So that tells you a lot about whether the economists know it's going up or going down. But what I think is even more important, and again, glad to have Kevin Galogli here with us to represent McDonald's. I'm told that they're actually bringing back the McRib in a few places. That's all I need to know, because there have been a number of studies that say the stock market does better when McRibs are available. So that's the only information I need.
I'm skeptical about this data, Mark. I want to know if that's available and in stock or sold out. Which side does that come into? I mean, I hate to disrupt this data, but that's my first question.
You're skeptical about the McRibs being available, or
about the causal relationship?
Well, the causal relationship. Well, I'll tell you what, if you go to the link down here on the lower left, that's what that article is completely about. And
it might be coincidentally correlated. It's not a cause.
It could be. There's a lot of mysteries in the world of investing, and Nick Majuli is a wonderful mathematician that takes a look at this kind of stuff. So
now, if there's a McDonald's on Wall Street and it was a bunch of happy traders who got really optimistic because their bellies were full of McRib, that might be more plausible.
Well, I think we need to send Kevin in to get a shot of the McDonald's on Wall Street.
You guys are killing me.
You
You're killing me.
You could do a little field trip action.
Don't worry.
I didn't think there was a McDonald's on Wall Street.
You keep up this McDonald's stuff, and I'm going to bring up A2 milk, okay?
There should be a McDonald's on Wall Street. All right, moving on. All right, here's a look at our weekly look at the return forecasts versus basically, we have many people in the audience who are returning that have seen this before. But again, the green bars represent the total stock market as measured by the value line arithmetic average. So again, it's basically the average of about 1,700 stocks. The red lines are the forecast, the manifest investing median projected annual return. So you can see that that's been tracking along. It's kind of been a fairly normal midpoint in that range from top to bottom. And that also kind of aligns pretty well with the fact that this line of reasonable expectations, we have seen the market drop back here over the last 6 weeks to where there's more stocks on sale than there used to be 6 weeks ago after a fairly red hot August. So it's come back pretty good. And then the value line, low total return line, that has typically tracked the manifest investing median forecast. And there's been a little bit of slippage there. And it does look like they may have gotten a little bit confused during that time frame, but heck, a lot of people got confused. by that bubble. So, any comments for guys on what you're seeing there? Are you finding more stocks on sale these days?
Yep.
I think
Yeah, I
there's
think so.
a big diversity. I think there's a lot of things that I thought would be on sale and are kind of market average, or I'll even say long-term average, 10 to 11%. But there certainly is sorting that chaff out. There's certainly left quite a few things to study.
Yeah, there's definitely a bifurcation in the market for sure. And I think we have a slide which deals with that right here. We've talked about this in the last few sessions. It is a frequent topic of conversation if you watch the talking heads on CNBC, but it is a fact that the largest companies are dominating right now. And that is I believe that's the top 10 with 2 entries for Alphabet, Google on the list. But these numbers are actually pretty staggering, as this person from Twitter, or X, formerly known as Twitter, actually brings out. And you can see that the top 10 are definitely throwing their weight around in virtually unprecedented ways. So pretty wild stuff.
And if you look at what I look at is when I see this is, this Magnificent Seven. If you look at them going, the top 10 as a percent of the S&P 500. Look where it was in the 90s at 12.2, and what the year to date is right now. So basically, the growth has been in those big companies, and the ones that I have among those top 7 have been the ones that have been performing the best in my portfolio.
Yeah, and many of those are community favorites. So I would say that, if Ken were here, he would say that he owns 8 or 9 of those companies, probably.
I think he owns all 10, doesn't he?
Could be. So it's a good time.
I don't see Cognizant on there. Otherwise, it would be all 10.
Mm-hmm. Good stuff. So I'm just amazed at the differences, as Nate has pointed out here. Those are pretty good sized numbers. And one of the things I think we may take a closer look at from time to time, Ben Carlson over at Ritholtz Wealth Management will take a look at, and he basically describes the index funds as the greatest display of momentum investing he's ever seen. And it might be kind of interesting to take a little bit deeper dive into that. 401ks are definitely affecting some of this, and with some of the ways that people are investing these days, that momentum is almost a self-fulfilling prophecy in some ways. So we might take a little bit deeper dive into some of the stuff that Ben has looked at with respect to that topic.
Nick brings up another good point. Second one for today. Knowing that these are positive performance years, right? This is clearly not and it's not even in order. It's a sort order by the most, I don't know if it's by the most positive years, I would assume, or most highest impact years. His question is what was their contribution to the market corrections in between those years? Interesting thought.
Yeah. Be interesting to see what did happen to the 2008, 2009 version after that 2007 and the turbulence in that. Good. I do not know the answer to it, but good question. All right, marching on. This one kind of grabbed me. Matt and I have been talking a little bit about companies that are in the spirit of a cage match. You want to find companies that are really foamy and frothy, and then go looking for ones that are not. Well, this list is the companies that are basically red hot. And boy, this is a pretty good list with few exceptions of companies that are fairly popular in the community. What are your thoughts on this one, Matt? I mean, this is clearly what's hot.
Yeah, I mean, certainly we know. I mean, so Novo and Eli Lilly are both great companies and have soared. In fact, I was looking at it because that's one of my potential cage matches. Lilly is up 100% since March.
Wow.
And for a company that size to move like that is amazing. But they have the I'm going to say it wrong. GLP-1 drugs, the weight loss, the diabetes turned weight loss drugs. So no, and I don't know what the sort order is here, but no doubt, no reason why they wouldn't get on the list.
Ozempic, is that what it is?
Yeah, well, yeah, that's the brand name. That's Novo's brand name. That was sort of the first biggest one, and now there are several. Vertex is interesting. They're a partner. I mean, Vertex is a great company in its own right. They're a partner with CRISPR Therapeutics, one of the companies I have, and they have a date with the FDA in early December. So as soon as we get through this Ardelyx excitement, I'll have another exciting block afterward.
There we go.
I was kind of struck here to see Progressive, and not just that Progressive is there, but with an 8% increase, and I think we thought this was daily, and it was an all-time high. They did beat their earnings forecast. I don't have the screen on me, like 3 or 4%, but I see a number of insurance companies doing quite well, and have only discovered that in looking at the deck before this time. So I can only take dangerous guesses, but I wonder, we've had a relatively quiet hurricane season, certainly.
Yeah.
That industry tends to live by the news on whatever the biggest disaster is or not. But it appears that they're prospering for that fact.
Yeah, it's an interesting area. In fact, we have talked a tiny bit on the fringes of Aflac and Hugh McManus, again, pharmaceutical scientist in his day job and a very long time holder of Aflac. He continues to accumulate Aflac under the speculation of what happens when a cure for cancer is found. And it's really fascinating when you think about it. They build up all these reserves to serve predominantly Japan, which is which are focused very predominantly on cancer. What happens to that company's finances if the landscape with respect to cancer changes dramatically? And that it's just wild when you think about it, and to see them on a list like this. These are sorted by market cap, so largest companies by market cap up at the top, and they are companies making new all-time highs.
That probably has as big a range of answers as what if the largest market cap automaker in the world was making only electric vehicles.
Yeah, and there are people that are actually saying the words that this might be bigger than AI in ultimate long-term impact. And I don't know, every day I roll out of bed they're impacting something else. Like ResMed, you lose weight, you stop snoring, you don't need the CPAP machine quite as much. And I don't know, there were several other.
Well, you get into even Walmart commented on it that because they run a pharmacy, they can do some data analysis, at least on their pharmacy customers, and they've seen that their average grocery cart size has reduced. I don't think Pepsi has commented on it, but you got to think that'd be an interesting thing to look at. And the number of I can't think of a specific one, but a number of restaurants also have their eyes open. So those are not just second degree factors, but maybe third or fourth. But yeah, I mean, the availability is still questionable. I mean, at this point, they can't make it fast enough. It is also not approved, I believe, in any insurance plan for weight loss only. If you're not using it to treat type 2 diabetes, there's a lot of things there. Speaking of diabetes, it's an interesting thing for Vertex too, because I certainly think that the real damage and creative destruction will happen once they go off patent, right? They clearly have a winner and are being rewarded for that, Lilly and Novo. Once they're available generically, then if insurance resistance lasts that long, if data and studies don't prove that the weight loss is worth it, which they well could, it is $1,000 a month, so $12,000 a year. How many ER visits or heart bypasses do you need to avoid to make that worth it? Then certainly any availability issues will be fixed. But even as such, and I don't think Vertex is, but CRISPR is one of a number of people with diabetes cures, and they're looking at type 1 first because type 1 is most expensive, and they need it to be priced at $1 million and be worth it. But like a lot of DNA work, and I actually did a tiny bit of work on the Human Genome Project back in the 90s when we sequenced the first human gene, and now you can get it done in minutes. With that kind of a trajectory, if that kind of cost can go, what are they going to do if there's a genetic cure rather than a chemical cure as a competing mode too?
Yeah, and
that is decades away. That's not in the next 5 years or even the next 10. That's just in phase 2 clinical trials. But even they haven't won. they have a great time, and I'm sure they're going to maximize their ability for it. But that's not forever either.
It would be interesting to get Hugh back to comment on this area, because some of you in the audience will actually remember this. Back at the advent of COVID, he basically came on and said they're going to figure this out. And what is actually really cool about all of this is you can call them unintended consequences or tangential benefits, whatever you want to talk about. He says they're going to be massive and they're going to be widespread, with all these companies trying to develop healthcare solutions. And there are certainly indications that is happening. And just with these GLP-1 stuff, I mean, the impact is pretty strong. So let's go ahead and take a look at what's not hot right now.
Well, I'm just going to add one more thing in here.
Sure.
I've been doing a lot of research on these GLP-1 drugs. The other thing that they're finding out is that people, they go on the drug, they lose weight, but they're not changing their behavior of eating practices, drinking practices, exercising practices. So they go off of it. Right there, the weight, they go off, the weight comes back on. Same issues. Mm-hmm. So it's whether or not human behavior can be changed while they're taking the drug to make them end up having consistent returns and to keep the weight off so they stay healthy.
Yeah, and nobody knows what if there are any long-term side effects. The earliest one of these was available 6 years ago, so that's still an open thing too. If it wasn't meant for that, unless you have dire consequences, is it worth it?
Well, that, and I have a girlfriend who has high blood pressure and is overweight, and her doctor said, you need to lose weight because your blood pressure is getting way too high and you're going to have medication, and she's only like 40. So the doctor gave her the medication, but these doctors don't understand the prescription dosages. Mm-hmm. He dosed her with 4 times the basic amount that you start with. So she ended up she took her shot within 24 hours. She ended up in the ER because all she'd done was throw up and lost 5 pounds in one day.
Yikes.
Yeah.
Well, the behavior change,
that's where the docs are messing up on this. So it'll be interesting to see what happens. You're right.
All right. For any doctors listening, we love you. All right. As far as companies that are struggling, in fact, Kim, maybe you have a comment on PayPal. It makes the top of this list. It appears to be a company that is, for whatever reason, low. I know it's a roundtable selection for you. What do you think? Are they pointed in the right direction and everybody's got it wrong, or
the big thing is what they had I felt that was going to be good is they had certain catalysts in place because they were going to buy back shares, which they said they were going to do, and they did. And they did not agree with the CEO and what his game plan was because he had bought a couple companies that had not turned out well properly, had to then sell them. So they now have a new CEO in place. So we have to give the new CEO an opportunity to do what he needs to do. So I looked in the background of the CEO. I think he's going to do real well. He's running a bigger company than he did before, but the company he had ran before he had gotten in 2 years, he'd gotten a 30% return on the stock price because of how he turned things around. So we just got to give him an opportunity now.
Give him some time. All right. So there's a bunch of medical device companies on here. I mean, I see Baxter, and that kind of sets off alarms for me. I mean, I can't believe that any of this GLP-1 is going to be incrementally harmful to companies like Baxter. I see a company like Baxter trading at a 52-week low. I'm just tempted to take a closer look. Any of them jump off the page at you, Matt?
Well, number 3 is GM, obviously impacted by a strike at this point.
Mm-hmm. Yeah,
Darling is toward the bottom, but I do like Darling International now. It's Darling Ingredients. I don't know why I don't have their name updated. Darling comes and goes. They take waste products from food sources, primarily animal fats and plant waste, and turn it into now everything from food grade collagen to biodiesel. An interesting catalyst for them is an EU mandate. They already supply diesel into the EU. That's in specifically biodiesel, because they get credits from their government incentives to bring that up. But it's going to turn to aviation, what they call SAF or SAF, Sustainable Aviation Fuel. A mandate starts in 2025, and there are not a lot of suppliers for it, and the suppliers that are there are to as many as 10 times as expensive as Darling. So yeah, now they have sort of a single source. Their refinery to do that is here on the Gulf Coast. It's a joint venture with Valero, and I wish they would put something up in the EU or something and get a little diversified in case a big hurricane comes through. But big opportunity in aviation for them coming up in a year.
Yeah, that's a recent selection by Kevin Galugli for the roundtable also. So we are tracking that fairly closely. So I just,
it'll be on there too.
Yep.
And what Matt was saying in terms of where they were moving with biodiesel, that's sort of where they think they can really make some big growth. Most of their sales are still in traditional stuff where they turn stuff into animal feed product, but they are trying to do things like the biodiesel and turning into basic black fly larvae and other things to be able to turn into future food and protein, either for human consumption or for animal consumption.
Yeah, the most interesting thing about that to me is that it's the same base ingredients. So they buy commodities, even though they're waste products, they have a cost. Look or ask at the next time you're at a fast food place, ask where they store their used oil, and it's largely inside now, and it may even be in a locked closet because people were stealing it. But they can take the same products they buy into different markets and different verticals. So if, for example, if the price of diesel is down, and there's a lot made about the price of gasoline coming down, but if you check the gas station, diesel has not.
Right.
But say it did. If one market goes down, they can simply redirect their output to another market that's better. And so for a company that's dependent on another of commodity markets, it's a really powerful tool to be able to adjust your outputs so much and by some significant numbers, depending on what market conditions are, to a point you don't care. Now one caveat here, because they have done a number of acquisitions, they do have a pretty high debt load. And I'm sure that's why they're down on this list and came down since July. In fact, they were in the 60s as late as July. They have a pretty high debt load. I think they have a first something due late next year. So if the Fed keeps things higher for longer, that will really start to put the screws to companies with these high debt loads. But if we moderate in any kind of quick fashion, and quick might mean starting next year as opposed to next year being at these interest rates the whole time, I think they'll do a lot better than what the market thinks.
Well, I'll tell you, I'm tempted, seeing, again, name dropping Hugh McManus again. He loves to shop near 52-week lows. It might be interesting to throw this one on a sheet and take a look at all of these companies and see if anybody really pops off of here. So good stuff. Thanks, guys. All right, moving on to the groundhog. Just a quick update. We do have a new leader. The wife of Fritz Braun, Heather, has taken over the lead, and for reasons that don't require explanation, I did have to expand the top 40 to 43 this afternoon. And, hopefully Ardelyx will treat that ranking well sometime soon. But a lot of familiar names up at the top. Herb Lemkool is lurking near the top along with his cool kids. Also, Matt, you're still hanging in there, right? Where did I see you? You're still
I'm
standing.
28, I think now.
28.
Yeah, that's fine. I'm there. It's like I said, you can't lead the whole year, but I've got a strong fourth corner finish.
Okay.
Hey, I'm thrilled. I went from 1 to 100, and I'm at 18.
There you go. Bungee jumping. It's not, you don't want that much excitement.
Interesting.
I'm below the Mendoza line.
You're still down there, huh? Okay.
I've got five options between two clubs, working one with a nephew and my own. So I'm not doing well on any of them.
Well, you're not alone, Kevin. And this market has been the type of market that has abused many of us. You see it in the best small company results for 2023. And the stats on the right are a clear reminder that the average groundhog is checking in at -6. During the period when the Wilshire is actually positive, thanks to that magnificent 7, largely, and the value line arithmetic average, it's of consequence because it is a blend of small, medium, and large companies. That's in at almost -9. So that type of market general performance / environment is going to hurt a lot of us. And that's not an excuse so much as a reason, because we do shop across the board for our companies. Many of the entries on this list represent actual investments, like our 3-time champion Bower City Ladies out of Wisconsin, Janesville, Wisconsin, at number 27. I'm pretty sure that they own all of the selections in their real life investment club. So just an example of the type of impact that this type of market can have. So good stuff.
Just to an aside to see back to our prior conversation, how quickly the rise of those GLP-1 drugs came on. The first portfolio of this list that comes up with Nova or Lilly, and they have Lilly, is the Cass County Tycoons. So the top 10 were doing it without that. Like you said, largely around those magnificent 7, the tech recovery there, but not a lot of the pharma things popping up.
All right, moving on. Hopefully I'll be above 43 next week. All right, checking in with our best small companies for 2023. We have not had a good year. It's kind of illustrated by the challenge of the Wilshire 5000, which is this one, versus the growth companies in the Russell 2000, which is over here, and we're not even keeping up with that this year. Again, winning 7 out of the last 8 years. This is a tough swallow, but we continue to have hope going forward. I did throw together a look at Metropolitan Bank because that continues to languish, is about as sugar-coated as I can come up with, Matt. It's tough times, but again, we will keep going forward. Here is a look at Metropolitan Bank. It has largely disappointed us. It's down 50% since last October. A lot of chin scratching going on the right. And I think the potential lesson here, first of all, we probably had too many regional banks, because you can even call Walker & Dunlop as a commercial real estate affiliated enterprise. But we have Service First on here and Metropolitan Bank. Maybe we got a little bit punch drunk with the regional banks a year ago. I don't know. Ken's not here to defend himself, so we'll just let it go at that. But here's Metropolitan Bank, and I think if I learned any lesson, it might be this one. The return on assets were already not in the best place and declining. The stock price had already gone from close to 10 up to over 100. And maybe it was a dangerous situation that we just kind of stepped into. And I think this one's probably my fault. What's the problem here, Matt? What did we miss?
Well, maybe to give a little context, and this is another one I hadn't really followed it, and I recently came back, but checking their shareholder presentation from June. So they are based, I'll say, solely in New York City, which if you had to be based in just one place, I mean, they're quite small. Had to be based in one place, you'd probably pick that. But then, people probably said San Francisco would be number 2, and that's probably not good. They also have, and it's not 40%, it's actually 69% of their, actually it's more than that, it's almost 80% of their loan portfolio is in commercial real estate, which hits a lot of buzzword bingo cards. I will say, digging down into that, only 9% of that portfolio is in office. They're actually quite heavy into nursing homes and financing nursing homes. So certainly there's a need for that. So maybe there's some market reaction on top of that too. But yeah, what you said. There are a number of bank investors that I chatted with outside of this community when I was learning about banks back in March, and a number of them are happy to hold, let's say, average or pedestrian return on assets of 1% if you have, let's say, a century-old franchise, right? If your
Okay.
customers are largely the farmers, multi-generational farmers who
Mm-hmm.
aren't going anywhere, aren't going to shop around, or like Bank of Hawaii is interesting too, right? There's certainly a strong sentiment among customers to be local there as well. But these guys, I think they started in 2004. They are not an old bank. And you have to, I think it's totally right to look at the downward trend. Can be dangerous. Their other safety factors are actually pretty good. Their CET1, so their capital available is 11.9. It's slightly less. It was 12.3 in Q1 of 23. So let's say holding steady. Hopefully that's not a trend too. The 73% of their deposits are insured. And they have coverage of their assets to uninsured deposits of 250%. So it's not, I don't know what you'd say for East Coast Silicon Valley Bank, but certainly the risks that it does have are recognized by the market and then some right now.
Okay. All right. So I mean, the takeaway here is probably for us to be careful with that trend down at the bottom, and maybe a little bit too much exposure to the banks.
Maybe a little too small, right? It's a 370 million market cap. Maybe it's even a little too small. It has a good volume though, over 100,000 shares volume.
All right, so let's talk about what we are going to do over the next 2 weeks to put last year behind us, and hopefully get back on the winning trail. Let's talk a little bit about the process of building out this list over the next couple of weeks. We do refer to the small companies as red rabbits, rabbits for their speed and their agility, and that's how we think of the best small companies out there. And we're going hunting. We guarantee that no animals are harmed in the production of this list, in case anybody out there is worried about that cozy little creature there. But here's basically what we go looking for. And again, we're trying to harvest the January effect. We have written in the past that we believe that the January effect has probably moved with today's you only lived once, and for the moment, living for the moment. The January effect is probably manifested in September and October now. So that's one of the reasons that we do the Halloween selections, trying to find some of these that are beat up, that have promising outlooks. So we go looking for companies with sales growth forecasts greater than 12. We do want excellent quality where we can get it. Superior return forecasts, all that stuff is fairly traditional. We would like to see consistent growth expectations, and that really is where some of the stuff fell apart looking in the rearview mirror. And as a bonus or a potential tiebreaker, we wouldn't mind seeing it at a 52-week low or with a low relative strength index. I'll probably add the 52-week low to this chart going forward, or the proximity to it. And so far, I've only gone over the community and audience suggestions down here at the bottom, a few screening results, which I will also publish, and then a quick look at the Brown Small Company. That's a traditional mutual fund that has an awesome track record going back decades, looking for companies that might be relatively undiscovered by our audience. So here is the worksheet, and I realize this is really busy, but I think when you just kind of grab your favorite adult beverage or cup of coffee and sit back with this one, there's some interesting stuff here. So these are names that have been submitted or discovered over the last month or so, almost 2 months in some cases. And I got to tell you, Matt, the one that really rocks me here in a good way is that far right-hand column. And I was not expecting this. We basically went in and charted the relative return of all these nominees. These are candidates. And to see the numbers in this right-hand column, again, relative return, the definition is, it is literally the answer to the question, how much did this company beat the Wilshire 5000 over the time period shown? In this case, the time period is since inception. So you have some companies that go back quite a few years, and in some cases a few decades. I did stop at 1993 for a few of these companies. They're actually older than that. The IPO is before that date, but I had to kind of draw the line here. Plus, I think my Wilshire 5000 index fell apart, but that's going back 3 decades. So again, I am absolutely stunned to see this, because it really underscores why we do this, because we're trying to discover these companies. And those numbers are just wow, over the long term. I mean, when you hear members of this community talk about owning companies like Neogen, and that's actually one of the more mellow situations here, but beating the market by 2.8 percentage points. And Matt, you've been a fan of Shockwave for quite some time, going back what is now almost 5 years, beating the market by 40 percentage points. I mean, that's just staggering.
Yeah, I think that gets them into pre-launch territory, and it's doing its best to get back. It's up 4% today, but yeah, another dip to give away, and no big news to wait there. They're at a point not waiting on FDA, but waiting on execution, and simply to grow. So I like them. It has been volatile. I have enough, so I haven't bought more into there. I definitely do own it. I bought it about a year ago. But really interesting technology too. It's a technology that you don't need to research strongly to figure out. Their demonstration uses a hard-boiled egg to say basically what they do inside, and you can get the idea of what it is.
Yeah, and I mean, I can remember sitting with Semler Scientific and Shockwave and literally flipping a coin last Halloween, and the coin landed wrong. Ken and I didn't make a mistake. The coin landed wrong. So anyhow, looking across this,
of course,
right,
of course.
It's a process issue. It's always a process issue.
You got to blame the process when all else fails. So what you're looking at here, again, that's the IPO date for the companies here that says inception. The manifest ranking, again, is pretty much the bringing the conditions we just talked about. We want excellent quality. We want a superior return forecast. Well, in the manifest ranking, you have that. So these are literally ranked by that manifest ranking. So if you're out there searching for a candidate to make this list, you're going to have to find a company that's at least in the top 2/3 of all companies according to our ranking. The growth forecast, again, we want that to be double digits. We'd really like for it to be 12 or greater. We will make exceptions, but you do see a couple companies which will basically be placed in purgatory on this list going forward. Interestingly enough, 2 of them are regional banks, and it's not uncommon for a regional bank to have a lower growth rate like that. Projected return on value as a return forecast. The quality ranking of the company. Here we're comparing the sales for 2024 projected versus 2023. Still trying to figure out how to read that, but we know that we don't like negative numbers. Now, when it comes to sales, we're willing to tolerate companies up to even as high as that 3 billion number for sales, considering it a small company if it's in a relatively large industry. So there's a little bit of flexibility here, but the 3 companies highlighted: Installed Building Products, Ensign Group, which, by the way, was a superstar performer for the best small companies 3 to 5 years ago. And down here at the bottom, CrowdStrike, maybe a little bit too big, so we'll kind of set those aside also. And then in the next category is the analyst consensus estimate of expectations for the total return for the next year. And if we're looking for lessons to take away from last year, I think I would urge caution anytime these numbers get too large, kind of like the relative value on a SSG-based stock study. Anytime these numbers get large, you really want to scratch your head and say, might that be too good to be true? So with that, Matt, what strikes you on this page?
Yeah, I guess, first of all, it's not just the outperformance, but I'd say the hit rate, the positive performance percentage is pretty strong in this list too. But I wouldn't necessarily throw out stocks that have shown a negative relative return at this point yet. If the company looks good, that could be a value play. And I mean, look at number one at Western Alliance there to start with. We all know what happened there and why it's there, but think about that. That's been what might, and I don't know for sure, what might otherwise have been decent performance was wiped out in a year, and that can happen with small stocks. But Ardelyx is its own case. I will say I've seen the first October 17th approval for the FDA go by. It's not Ardelyx. It's a company called UCB, which is a European company. So they're putting out
real-time monitoring, huh?
Yeah. Oh, hey, we are long-term shareholders, but that doesn't mean we can find certain moments interesting. Maybe that's why there's a lot of baseball fans here. But anyway, so it's after European close, so the European ones are coming out. So hopefully we see news on that too. But I mean, that's obviously you need something other than an asterisk, because asterisk is taken. But obviously that gets a number of asterisks about kind of a special situation.
Well, it's a close your eyes, swing for the fences when it comes to this list.
Yep. And Portillo's, not to bring it up, but it's there. Obviously has a very, very short history.
Matt, I would just point out that when you have a company with a minus 27.1 on here, that actually gets my attention.
Yeah.
As a potential undervalued play. And I'm going to be probably, in all highly likelihood, I'm trying to find the right phrases that won't bother Kevin so much, lobbying and campaigning for that one to remain on the list this year. Because
I mean, if it's SSG looks convincing, if it's not a SPAC that has almost run out of money, almost run out of cash, and can't face a bond issuance because they don't have anything to have confidence for a bond, would have to severely dilute their stock to do it. Yeah, that was a lottery ticket that didn't pay off. If it's a company that otherwise looks good, I am on the adventurous side of things, but I am absolutely not turned off by that. I do find those interesting.
Mm-hmm. Yeah, MP Materials is an example of that, by the way. That is a reverse SPAC that also went into a very uncertain period of production capability that is apparently coming online. And but they've been talking about it coming online for a while, so we'll wait and see. But that one could survive and go on. One of the things I do want to be careful with is, I mean, we actually covered this in the past. There were companies that were had negative results for 3 years running. We would dump it from the list. The next thing you know, if we had kept it on there, it would have led the performers that next year. So this year to window thing is tough. It just is.
I forget who, some time ago, the quote was on Manifest, but when we were looking at the S-curve, but things are usually neither as bad nor as good as they seem, right? General reversion to the mean. Now we have Sandy Castor is throwing out Catalyst Pharmaceuticals, CPRX, which is an 85 quality and is a 41% par in Manifest.
Fact, I added that to the list last night after talking to Joan Loken in Denver. They actually have a model investment club that centers on small and medium-sized companies. So I asked her for her latest. So that's actually on the list when we update it for next week. And it does rank fairly highly. There's a number of companies on here. I think Yeti will probably survive. A company that came to our attention that I had never heard of before, Sapiens. SPNS is the ticker. Number 8 here on this list. It's a worthy study, and I haven't reached any conclusions about it yet. It does have a negative relative return, but that might be a fairly recent. I believe it's a European company, and
UK based.
UK based, and perhaps they're just having a few bad days. Who knows? But pretty interesting study. You can see that it ended up 8th on this list. And Ty had submitted EXL service and a couple of others on here. MedPace is another one that he has some personal experience with, along with NAPCO. Ty, what are your thoughts? Or excuse me, Ty, what are your thoughts on any of these?
Yeah, NAPCO is a really interesting company. It's a little Long Island manufacturing company. They're only $170 million in revenue, and they make building access, security, fire detection systems. And they're moving toward. They have very high margin on these devices they make. They provide different levels of security, not just for homes, but for also for schools and factories and businesses. And they're also moving into a kind of a recurring revenue model where they're replacing the copper way, basically the telephone way of linking everything up with 5G wireless. What's really interesting about this stock, though, they restated their 10Qs for this year, all three of them, before they issued the 10K, and they had miscalculated their cost of goods sold. They got caught up in the chip shortage, and they didn't want to lose revenue, so they were rapidly buying chips wherever they could find them, and somehow their accounting system didn't keep up. And when they produced those quarterly reports for this year, they understated their cost of goods sold. So the market really hammered them when they announced that they had to restate their quarterly earnings. But kind of a boneheaded mistake, I think. I don't think it's an indication of fraud or anything improper in the company. They just made a big mistake.
Yeah, did they
the stock drop
for that one, Ty? Do you know?
Say again?
Did they catch the mistake themselves, or did somebody else catch it under scrutiny?
I don't know. They did announce that. They issued an 8K and then mentioned on the conference call. I think they did. Although of course, then the hordes of law firms that sue companies for errors in their public reporting kind of piled on. But they dropped 28% on that announcement. And then the other thing that happened this last quarter, their revenue was off because they said there had been a move from 3G to 5G, and a lot of the folks they deal with bought up their 5G products early, anticipating it was January of this year when the 3G was being phased out by Verizon. But it's an interesting company. The founder is still there. I think there's a price anomaly right now. I think the market overreacted to the restatement news, so it makes it kind of an interesting special situation. It's not going to be. This may be a little optimistic. The 14.5% growth here.
Okay.
It could be. They've had great. They've had really spectacular growth the last 3 or 4 years, and the notion of converting from the old copper systems to wireless and then setting up centers on monthly subscription. They had a 25% growth in their recurring revenue segment, which is a big part of their business, maybe 40% of their business. So I think it's a very interesting little company.
All right. Now we're going to cover InMode here in a minute. That is an Israeli company that's obviously impacted by the current news. But you also had mentioned MedPace as an interesting study, number 16.
Yeah, so MedPace is in the business. They companies outsource the clinical the clinical testing process, the different phases. And MedPace is probably the smallest of the companies that do that. Some of the big companies like Charles River Labs, LabCorp have very large internal organizations that do that. But what's interesting about the company is it's in Minnesota. It seems to have a very cohesive team together. It just seems like a nice company, and they've had really good, consistent numbers year over year. So it's, I just think it's, and they're the smallest of the companies that do that the contracted research organization. They're I think when you look at the list of the going companies, they're on the bottom in terms of revenue. It doesn't mean they're a bad company. So they've got a lot of upside potential, I think, as they expand. They're mostly in the U.S. They say they're international, but I think 95% of their revenue is domestic. So and that's I think worthy company to take a look at. Charles River Labs would be one of the kind of the comparison companies, a little bit bigger.
Yeah, and Charles River.
Mark?
Yeah, go ahead.
I was going to say, just to do some shameless self-promotion, Ty actually did present MedPace at our September edition of Digging into the BI, where we have, so he did a really nice presentation on it. It's up on YouTube. I'm not an organizer. If you make me one, I'll put the link in there so people can find it for Ty. But yeah, Ty did a really good job. One of my clubs already owns MedPace, but Ty really sort of put it all together there. So that just a little promotion.
Okay,
Thanks, Kevin.
let me see if I can promote you and give you an increase in pay.
Double my pay. I feel it.
Double your pay while we're at it. I
Yeah.
think you are now promoted. All right. So again, I think it's a very interesting list. I just love those numbers on the right. We will be updating this fairly continuously in the days ahead. The ones that are highlighted in red will be set aside into a purgatory mode, and we'll just continue challenging and discovering going forward. All right. One of the things that I did want to point out is I have toyed with the concept of keeping a regional bank. I think Ken wants to keep a regional bank. I still believe the Western Alliance is not prone to some of the problems that some of the other banks have. Although they do business in California, it's out of Phoenix. There's just a whole lot of stuff going on here. And yes, I do still own shares of Western Alliance that I purchased in the mid-30s. So I know that's something that you guys are all worried about, whether I can actually hold them through the weekend. I've held my Western Alliance through several weekends, and I actually have pretty high expectations. These are slightly toned down expectations from what you saw on the previous page. Those were kind of a high case scenario. You can see that most of the growth forecasts are in the low teens, very achievable return on equity, EPS growth rate in the mid-teens, just a whole lot of decent characteristics here. And this year has been nothing short of quite an adventure. And this is kind of the different situation from Metropolitan Bank in that these guys are inhabiting a much higher strata of return on assets in the very desirable range. Yeah, the lifting's gotten a little bit heavier with this condition of the bond market, but these guys still are in that close to that 1.4, 1.5 range. You can see that their 5-year average is exemplary. So that's what we are looking for. And I do think this is one that could be lobbied to be hung on to going into next year's best small companies for 2024. Any other comments on that, Matt?
Yeah, I would say on this, to your comments on the revenue growth, anyone starting a fresh SSG and looking to just draw a straight line, I call your attention to the Q2 earnings call, where the company management said specifically they were not going to look to grow as aggressively as they did before. Some of that growth emphasis resulted in real, and I'll say relative weakness. Their CET1, their capital level ratio was just a hair under 9%, where the industry tends to like at least 10% and 11% to hold on there. So that they were aggressive in the real numbers, and of course it fell out of favor with the carnage in March. They also said, rather than saying that's just bad business, they said they were never rewarded for that. If you look at their PEs, it wasn't like they were blessed with double-digit PEs to go through everywhere. So that the PE is actually relatively stable at 6, and a lot of them are 6 at now. So it is not PE projection, but it will be still growth. They're in growth markets. Mark said they're based in Phoenix. They have business a lot of places too, but they're sort of in a geographically right point to have a overall growing business or market around them. They've telegraphed that it will be moderated from historical levels.
Sure. And again,
Hey, Matt,
keep in mind that historical levels were 15 to 20% back in this time frame. So yes.
Matt, could you just talk a little bit about when you're looking at these regional banks? You mentioned CET1. What are the things that we should be looking at if we're trying to size them up?
Sure. I am not an expert on it. I've learned from experts. So far, I tell it because the Houston Model Club did buy Western Alliance in April, and brave souls that they were. I had to leave. I'm the sitting presiding member, presiding partner. I actually had to cancel out that day. I had a family emergency, so luckily my industry study team was there and filled in the gap, and they bought it. So I told them it's been a successful speculation at this point, right? We hope that in the long term it'll be good, but however easy it is to sit on the profits we've had since April is just because the speculation has gone right. But the best thing I could say for those in the audience that are better investing members, there's two there's actually 3 presentations, or maybe even 4, but 2 different people. And you have to help me with the names, Mark, because I'm going to forget.
Ross Meredith is one of them for sure.
Yeah, Ross Meredith out of Colorado, and Joe Farrell have both done webinars specifically on bank analysis. And if I know anything, it starts with what they told us, and particularly Ross's second. And these date back. I think Ross's presentations were 2017 and 2018, so it's before all of this stuff. So let's say when he talks about, he has a great form, in fact, which is what we use in our industry study at the Houston Model Club, and he gives some target ratios that I'll say are for sunnier times, but you can see where things are relatively speaking. The other source of really looking for safety is, and this is going to be, this is going to make people just fall asleep probably in the details. In the FDIC filings, it's I think it's I forget what they call it, but it's section O, and it's letter O, not number 0. So you can imagine how many sections there are of it. But that is a section that details the breakdown of their deposits, right? So part of the issue of Silicon Valley Bank was the run of deposits, right? They were highly concentrated with highly connected people who could move their money fast and had the willingness to do it. So if you think about in sort of military terms, if you can kill one of those, you're much better. But you can see when they talk about their level of, and a lot of the banks now are including it in their quarterly earnings because people have suddenly gotten interested in it. But you can see the real data and see, and people say, okay, what % of your accounts are insured? You can actually see, and the FDIC asks, what's your total deposits? This is the sum of deposits, not account, that are $250,000 or less each, and that are above $250,000, and things like that. But yeah, Ross and Joe's for 3 to 4 hours of your life, you can come a long way into understanding, and not just seeing sort of, to know, to be confident doing an SSG, but you can see why Silicon Valley Bank and the other ones had problems, and that's how the engineer in me knows that I was onto something.
Yeah, and I would just simply make the point and underscore the return on assets graph that you see here was added to the Better Investing Stock Selection Guide as a result of that work shared by Ross Meredith. And again, anything above 1.25 is good. Anything above 1.5 and consistent and staying in that range is exemplary. So again, it's a very important performance parameter for a bank, again, added to the SSG as a result of the classes that Matt just mentioned. Good stuff. Thank you, guys.
Thank you.
All right. We're going a little bit longer than I thought we would, but oh well, we're having fun. So let's have a little bit more fun. We've talked about the cage match. This was inspired by you, Matt. And that recent article talking about hedging. Morningstar basically put out an article which had 4 companies that they would short so that they could buy 4 different companies. We'll actually keep track of that. But that's the origin of this notion of pairs and tag teams. So literally what you're doing is finding a company that is overbought. This is not the time for this with what's happened in the last 6 to 8 weeks with most stocks. But perhaps you can find something that is really lofty, like the GLP-1 stocks that were listed on that slide a few slides ago, or just something that is a train wreck in progress or whatever, and you sell $100 of it. You basically short it. And then you take that $100 and invest it in the type of thing that we typically look for, and a high potential tag team partner. So what I did, I actually had a pretty rough time with this. I don't know about you, Matt, but I am not used to looking for stocks to sell.
Yep.
It's just counter to my nature. We're not wired for this. And the market right now has been so messy that there's not a whole lot out there. But for purposes of demonstration, I did select InMode. That is it had been one of the top performing companies in this year's best small company list. Again, they're in the cosmetic surgery end of things. They were in fact listed as a company that would benefit from cosmetic repairs with weight loss, substantial weight loss. So this is a company that will benefit from GLP-1, at least theoretically. But they happen to be headquartered in Israel, actually in Tel Aviv. And even though they only sell 1% of their products in the country of Israel, they've just been completely hammered. I think the stock price has been basically cut in half, which is not helping our best small companies. But high quality company with a pretty good track record and reputation for products and services that they deliver. I think that it's been unfairly punished. They did release statements saying that none of their production capacity or inventories were in any trouble. That troubled both Matt and myself when we saw that. But we're basically looking at a situation where that's the company we went out and bought on kind of a special situation. Relative strength index under 20. So that's the one we bought. The one we sold was Jabil. They basically do a bunch of stuff with chips and electronic components, some of it automotive. And I just found a little bit of heartburn going over some of the stuff and some of the challenges that they face. They may have some strike impact. I'm not sure. Matt, do you know what type of automotive component that they actually have?
Well, I mean, so they're a contract manufacturer. I believe they work. I think they work pretty heavily with Continental, but because they have that building up on the hill in Auburn Hills that they work with. I just don't know what percentage of their business that is anymore.
So for this demonstration, what you're basically looking at is we sold $100 worth of it at that $139 price, and we're looking for the price to go down to actually gain, and it has done that. So we actually show a positive result on the Jabil component here. InMode has continued to sag a little bit, so the judgment of success will be if this number turns green going forward. So that's my first pair. I will probably go out and try to find another, but it was a little bit more difficult than I expected. And I know, Matt, you're thinking about Lilly and including some other beneficial company on the positive side. So we'll see.
Yeah, sorry, Cass County. I love Lilly at the right price, and among other things, I am a Hoosier. But it looks like it's been already rewarded or has very high expectations of a total victory.
Now we can close these at any time, these individual positions. So anybody is invited to try to put these together. Here's a look at the two companies. Here's InMode. Again, very strong track record. It's one of the reasons that Ken brought it to the best small companies list. I think he's also featured it in other programs. And it's just been completely punished. You know, you see the relative strength index way down here. You see the bad news in the Middle East causing that type of a price disruption going from 30 to 20 virtually overnight. And the outlook is still pretty good. So that's the basis for selecting InMode. The basis for just kind of questioning Jabil a little bit. Again, it's a good company, but it's actually had a pretty good run up of late. And you can see that the relative strength index here on the shorter term indicator is above 70. And the thing that I kind of point to is anytime that has happened in the past, you do see price stagnation or downside. Anytime that's happened, and then even going back on the longer term outlook, again, anytime you have these overbought conditions, this one's a work in progress, you see a downdraft or a plateau. And that's what we're looking for anytime you basically use a company like this as a source of funds for the pair situation. The other little tidbit here, and we'll probably dig into this a little bit deeper, is they have been a really steady company as far as buying back shares. And my spider senses are tingling a little bit. They're probably buying back shares historically when they should not have been. And we might try to delve into that a little bit. It just didn't make me feel comfortable about efficient use of capital, for lack of anything else. So anyhow, that's the two companies. Quick reminder, we do have the coming attractions. We'll continue with the worksheets over the next couple of weeks, trying to discover those exciting small companies. A little bit of a session on early stage investing again came up during today's discussion. And When the Blind Lead the Blind coming also. Quick reminder that we archive all of these presentations on YouTube under Manifest Investing. You can go back and take a look. Here is Ty's presentation on the thrift savings plan. If anybody in your family can benefit from that review. And again, thanks again, Ty. All right, and we'll close with a great pumpkin grown just a few miles from where I live in Clarkston, Michigan. That is a great pumpkin. And on the far right, and this is kind of a tribute to my grandmothers, I can remember back in the 1970s sitting with both grandmothers, and they were absolutely addicted to World Championship Wrestling, or whatever it was called back then.
Is that Dick the Bruiser on the right?
I think that's Vic. I think that's Gagne. Vern Gagne on the left, and I think it's the Crusher on the right.
Yeah, I used to watch that too. I used to watch Hulk Hogan before he was Hulk Hogan, because we were in Minnesota at the time, so it was out of Minneapolis.
There
and
you go.
You don't bet against Vern Gagne because he was the owner. if he lost, it was because he wanted the storyline.
Yeah, and his son went on to replace him, and he was about half the size of Vern, and somehow managed to win quite often also. So again, it's I can remember my grandmothers just going absolutely crazy over the World Championship Wrestling. This was back when the TVs had 3 channels on them.
Yeah, and the arenas were dark, about 3 feet out of the end of the ring, because it was just a ring in a room.
Absolutely. Good stuff. So cage match can be fun. Please, if you have a couple of companies you want to come along and play, send it our way. Send me an email, and we'd be happy to entertain your tag team. As part of it, you can either be famous or infamous as a result of participating in this event, depending on how your gain-loss column looks like over here. Okay, so with that, guys, we'll go ahead and sign off. Any questions or other issues we need to take care of in the back room, guys?
No, the question box was short and sweet, and we hit it in line. I will say, just for random fact checking, in case people doubt my Google foo, there is no McDonald's on Wall Street. There is one on Broadway. It's a 4-block walk.
Only 4 blocks away.
Yep.
Okay.
Easy. You send the interns out for it.
We need to catch a picture of Kevin at that particular installation or establishment. All right.
Well, I think it's time for you to send me there, Mark.
Company junk.
With all your Portillo winnings. How's that?
There you go.
Oh.
As soon as I can find the corporate jet, I'll come out and pick you up, Kevin.
I'll even take the corporate Amtrak. How's that?
There you go. All right. Thanks, everybody.
All right. Thanks, Mark.
Good night.
Bye, Kevin.
Good afternoon. Bye-bye.
Welcome back, Kim. Good luck out there, and send us your best small company ideas. Thank you.